Dear viewers, Assalamu alaikum. আপনাদেরকে এনটিভির Accountancy and Tax Insights প্রোগ্রামে স্বাগতম। আশা করি ভালো আছেন। So, as you know that this program is a fortnightly program, a live program. In this program, we try to discuss our entrepreneurs' issues related with accountancy, business, taxation. We try to give you update regarding the recent HMRC or government tax rules. So today, our topic is capital gain tax and inheritance tax, because these two taxes are quite related, and that's why we wanted to discuss these together. So we have two distinguished guests today with us. So in our right, we have Mr. Somoyer Sathe. So Somoyer Sathe, welcome to our program. You came today in a hot day, so we're really pleased. So if you wanted to say something to our audience.
Thank you, Dubir Bhai, for inviting me and having me here. Your important program, which is very popular show, so far I know. And then along with thank you NTV as well for having me here. So I'm looking forward for discuss, and if whatever I can afford, knowledge I can share with the NTV audience, I hope I can do it.
Thank you.
Thank you.
So Mr. Somoyer is a practicing chartered accountant. He is the director of Henderson Royce Accountants Limited. So he's been serving our community for more than 10 years. So he'll be here to share his knowledge and experience with dealing with CGT and IST issues. So on our left, we have Mr. Shijil Khan. So Mr. Shijil Khan, Assalamu alaikum, how are you?
Walaikum salam. My second time here. Thank you.
Yes, thank you for coming. So just for our audience, Mr. Shijil also my teacher, just to let you know. I learned my basic accounting from Shijil, just to tell you, my audience. So thank you for coming again. And today our discussion is regarding CGT and IST. We'll go through step by step. So if you wanted to say something to our audience.
My pleasure. It's always nice to be invited here, and having a host like Dubir is always helpful. He's himself sort of qualified, so discussions gather good momentum, and like Saha said, we're very happy to engage in these discussions and answer any questions.
Thank you. So dear viewers, if you have any question for us, you can ask us live. There is a number on the screen. You can call us and you can put a question, and we'll try our best to answer your question. Our topic, as I said, that today is capital gain tax and inheritance tax. So Shijil, first of all, I come to you. Before we talk about, there are some update on inheritance tax. We know that there are some changes, and those changes might affect our tax planning. But before that, CGT and IST is a sword with double side effect, isn't it? So we need to be careful, isn't it?
Absolutely. I think and the understanding, people understand income tax because it's something that goes out of your income on a monthly basis. But IHT, I personally feel, is one of the iniquitous taxes which are paid by the people who are either unfortunate or underprepared.
Yes.
And most of the people don't understand it, and I think in UK it is probably one of the highest taxes around other taxes when you compare it, and in some parts of Europe what they call it wealth tax, and it's not even that high. So just going back to your question, yes, I mean, and the interaction of IHT and CGT is something that's not very well understood.
Yes.
So I think it's very important, I think, that people understand it, particularly those who have portfolios or assets which may attract IHT or CGT sort of going forward. So yeah, I agree that it is something which is a double-edged sword. Like
yes, that's what we have to be very, very careful that how sometimes you wanted to save IST, then you end up paying CGT.
Absolutely.
So you need to be careful on that.
You're
anyway,
right.
So regarding the inheritance tax, there are two significant changes. One is the pension was never part of the estate before. But now it will be going forward. And then obviously there are changes in terms of there was no limit on how much business relief and agriculture relief you could claim before. Now there's a limit of 2.5 million. Initially they started with 1, and then there was protest and everything. Now it's 2 million, 2.5 million per person. Now if you can just talk about a bit detail on that, and actually what will be the impact for that in tax planning for our audience.
Yeah, I think it's a very good question. First of all, the pensions, bring them back into the estate from April 27. Now that has been really calamitous for some of the clients. Now think of people who have gone through salary sacrifice, trying to put extra money into pensions, thinking that's the last thing that they will draw from, and that could be left to their beneficiary if the death occurs age of 75 or before, free of all taxes. So there was no inheritance tax, and there is no income tax on the pension if it's left to the beneficiary. Now, post April 27, you stand to pay basically potentially 2 taxes. So give an example very quickly. Somebody have a pension of 1 million. So that'll become part of the estate. So 40% on that goes out straight away, 600,000. Now, if the beneficiary is a higher rate taxpayer, when they get this pension, they pay another 40% on that, which means another 240,000 wiped out. So a 1 million pension would be passed on to a beneficiary who will eventually get 360,000. So you can see the drop. I think it's about 64%, which is just very alarming. So I have 1 or 2 clients who are into their sort of early 80s, and they've accumulated a very decent pension, and now there's a real problem. We got to decide whether they draw the money now, they go into a drawdown, get the money out now, and then maybe start using maybe lifetime gifts policy or some other way to mitigate or minimize that amount. And their pensions, one of the clients, their pension is $500,000. So it is a real problem.
So the pension, we used to keep the pension as our last resource.
As the last resource.
So now maybe it is not, we have to change the policy that maybe we, lifetime we enjoy that, isn't it? Something like that.
Absolutely. and also, I mean, it's there's some clients, I've asked them to load their pensions because the annual allowance you get. So it is 60,000, and then you can go back sort of 3-4 years. So I would say to them, look, if you can, why not put 200,000 into a pension?
Even they did.
And you get tax relief on it. And now, 1 or 2 clients weren't very happy, with the advice. But you can't predict the future, and then that tax is an ever-changing landscape in the UK. So these things happen. But I think it's just this pension raid, to my mind, particularly those people who have worked sort of 35, 40 years and built up a good pension, thinking, they could leave it to a beneficiary free of all taxes, is caused a real problem.
No, that's actually, over the time now, I've been a student of tax, now I teach tax, we work in tax. Over the last 20 years, what we've seen with the pension is always a favorable thing for taxation purpose. In terms of income tax, you employer pay for the pension, you save for the corporation tax. It's always get a bit of motivation to save on pension, isn't it? But this IST actually getting into the different dimension now.
Yeah, I mean, I think unfortunately that's the case, and I think I don't know whether also your tax is very political as well, don't forget.
Yes.
So I don't know whether this will, I mean, it's quite funny if you think about it. They abolished the upper limit, because I think it was about 1,073,000 that you can get up to tax relief. They removed that and then suddenly brought in a 40% tax on and brought it back into the estate. So, and pension is something because pension is already in a tax wrapper. So you can't potentially transfer a pension to a trust either. So you have to draw down, which means that you pay tax on it. And then if you put it into a trust, even that is not a very good, very sound structure to have. So I'm sorry, at the moment it's not looking so good.
Okay. And on top of that, if you bring that business relief, obviously I'm talking about the portfolio, net worth, high individual net worth, maybe have a loss of property or shares. So in that case, the limit on the 2.5 million on the agriculture relief and then business relief also doesn't help as well.
No, you're right. I mean, people need to have an exit strategy now. Previously, if my business is worth 10 million, I know it's 100% applies. I can just, maybe pass it on, or somebody can carry on as a going concern. Now, again, the same situation, if you are exposed to a very high tax, a very scathing inheritance tax at 40%, and your business is valued at, upwards of 5 million or 2.5 million or whatever, there is something.
Sell the business.
There is all the more cause of having an exit strategy in place.
Yes.
And Sa says rightly so, sell it. There is a capital gains. Then that money comes into the estate. What are you going to do with that? So there are more questions
More
to answer
planning.
now.
You have to do
Yeah,
more
so
planning.
that's why you need to do with more planning.
Yeah, very
So
good.
thank you for that. I'll come to Mr. Somoyer now.
Yeah.
So we are discussing about inheritance tax and CGT, obviously, because this goes together
Correlated,
sometime,
yeah.
you know.
Yeah.
So, but before that, you know, for our audience, I think one of the most important thing in our community is, you know, lack of awareness, you know. And one of the things
Correct.
we see people, you know, unfortunately, obviously, death is part of our life. We have to
Correct,
die. You know,
yeah.
that's the
Of course.
rule of the
The
law.
universal truth.
Natural, yeah. That's the
You can't
universal
avoid.
truth, yeah. So, but people sometimes doesn't have a will.
Yeah.
And that create lots of issues. So if you can tell our audience, because I think this is very important for them, that what is actually will, and what if you don't have it, what is the issues can create for them?
Very important question actually. Basically, a lot of people doesn't do the will,
Yeah.
especially our community people.
Yeah.
They're thinking, oh, why I'm going to do that? Why I'm going to spend money? Basically, it's not like that. Will, actually, will is there is a one legal documents.
Yes.
Yeah. So which is like it will help for future when somebody passed away. So then, if it is will is exist
Yeah.
before passed away, then this will helps you all legal the requirements. Yeah. For example, now one person before he die, if he said that okay, I do the will, I have a main residence, I have some investment property, some worthy people.
Yeah.
So if they decide that okay, I am gonna pass it to this property to my wife,
Yes.
or to my children,
Yeah.
or
Whoever they
like-minded
wish,
people,
yes,
or charity.
Yeah.
So if they do these things, what will happen then already in place? So you don't need to worry about you are passing to your
Whoever you are desired
the
for, it
desire,
will go
yeah.
accordingly.
So they don't
Yeah.
need to face a lot of hassle,
Yes.
basically.
Yeah.
And then they can save some legal cost as well.
Yes.
Because if you don't do that, then what will do? Executor, whoever you appointed, goes to the government. Government will decide then
Yeah.
who goes to his.
You'll follow the law procedures.
So in
yeah.
law procedures you need to follow. So that is the another benefit actually. This is and few benefits is there as well, because I believe there is a tax planning as well if
Yes.
you do the will, because
when you are doing the will, you're thinking about, okay, if I do that, what will be the tax consequence? Until you
Correct.
answer those questions for the will,
Yeah.
you are not planning, isn't it?
one more thing I wanted to share with you. I know few people, my community, they said, oh, will is charging only 50 pound, 100 pound.
Yeah.
I can do the will.
Yeah.
This is not like that. You can, if this is like simple, you know, what is called, this is the template. People
Yeah.
download it
Yes.
and then they sign it.
Yeah.
But I believe that if you want to do the proper will, then you need to get advice, financial planning, like Mr.
Mr. Khan, yeah.
Mr. Khan,
Yeah.
that they knows
Yeah.
what is the tax planning. If you decide now, before passed away, then it will be the proper direction.
Yes, yes.
Then it will be whatever because I know after you died, you don't know what is going on. So you know that you earn money, so make sure they utilize properly.
Yeah, thank you for that. So, Somoyer was talking about the importance of will, and then if you don't have a will, obviously it will go with the different route. The, the law will decide actually who gets what, but that might not be your wish. So will is the first thing you sort out. But one of the important point he mentioned, because in will you say you wish, I give my son half or my wife this and that, but if you don't plan it with the IST and obviously also CGT, then you might end up paying tax, or your executor or your estate might end up paying higher tax, isn't it?
Absolutely. I think the will is a cornerstone of your planning.
Yes.
So you need to engage a professional
Yeah.
who can sit with you. I mean, it can all start from a letter of wishes that
Yes.
you can put together and give it to your planner, financial planner. If your estate is very complex,
Yes.
some lucky people, maybe 3 marriages,
Yeah.
7 children. You see, so then we recommend that you engage a solicitor. There is slight misconception. People feel that because will is a legal document, it must come from a solicitor. It doesn't have to. But if it's a complex situation, if you got a lot of foreign assets, if you got a situation where you got business partnership with your family, whatever it may be, then the complexity would suggest to avoid any disputes.
Yeah.
You go through a solicitor. But in most cases, if it's a reasonable situation and your assets are all not jointly held, and then first bring it all together, think of IHT planning. It's easier to say that it can go to your children, but there may be IHT on it.
Yeah.
If that's the case, try and make some lifetime transfers, leave them out of the will.
So when people are young, then they should start with, because of 7-year rule.
7 years rule.
Yeah.
Absolutely. So the key point really is that with the will, you have to make sure that it is done in a cleanest possible way. There is no ambiguity left there for anybody to kind of dispute it.
Yeah.
And have a professional in place who can execute your wishes as well as make sure that the tax implications are favorable.
Thank you. So there is another thing, is sometimes it's important to have a power of attorney for certain scenarios. So if you can share your thought on that why a power of attorney can be important for some scenarios.
Yeah, that's right. I think power of attorney, there's only two types. One is to do with your financial matters and one is to do with your health matters.
Yeah.
And it's important, particularly people who maybe have a recurring illness.
Yeah.
Just to preempt a situation, it is always nice to have a power of attorney in place. And the one for the both need to be sort of registered with the Office of Public Guardian. People with a lot of foreign assets, maybe. I have a property, you might have a property in Bangladesh. God forbid something happens, there is a power of attorney in place which is acceptable to the banks there and so on. So you got to look at the estate overall and then decide. I'm a firm believer, don't overdo on things.
Yes.
If it's like insurance, you never go for overprotection.
Yeah.
But get the basic
minimum you need
in
actually.
place.
Yeah.
So I mean, some of the clients who are 80 and above, we strongly suggest that have a power of attorney in place, particularly for the financial matters and health matters. There are some single people who are 75 and above, and there we say, look, with the minimum of effort, you can appoint an attorney, get the PO or lasting power of attorney registered, and have peace of mind. So that's where the whole thing would.
Thank you for that. So I'll come back to you later on this regard. So Mr. Sojoy, because we are discussing IST and capital gain tax, but obviously capital gain tax is something, obviously if you sell an asset and it's a chargeable asset,
correct,
and then you pay a gain tax, there are annual exemption £3,000.
Yeah.
There are different rates. But in general, for our audience, with your experience, what will be your suggestion for them for proper tax planning or when they sell asset for capital gain tax?
Actually, there is a quite broad area, capital gain tax, and especially in this country, because everybody, most of the people, the wealthy people, they have a property.
Yes.
This country, so their property appreciation is gone very high. Last, if you compare to last 10-15 years back. So capital gain is whatever asset you sell, appreciation asset, then is subject to tax, capital gain tax. So capital gain tax is there is a two rate. The audience don't know, is a 18% and 24% the basic rate.
Yeah,
and
previously there is to differentiate between residential and non-residential. There is nothing like that.
Nothing like that. Yeah. So this is the rate I'm talking about, and you are talking about the planning.
Yes.
So CGT planning, there is a few planning in place. You can. So this is basic one basically. For example, if you sell the asset and then you can get the annual exemption, so 3,000, make sure that you can utilize.
Because annual exemption cannot be carry forward.
Carry forward. So otherwise it will be wasted for you. Second things, if you spouse involved the asset, try to. So some people they can involve because your spouse is less taxpayer. There is a planning. Then you can include her in the asset somehow. So with the legally whatever it is possible. So then you can use two annual allowance. For the person who is selling and his wife as well. So because both husband and wife, they will get two annual exemption. 3,000, so 6,000.
So make sure that you get both exemptions.
Both exemption. Then you can see there is a timing is very important when you are selling. So for example, if you sell that, okay, I'm paying, some people income is higher or lower sometimes.
Can differ.
So see that when we can sell this, my tax rate is under basic rate. So then you can sell it, pay the less tax. So another timing difference as well. So make sure that you sell the capital asset before the year end. Yeah, for example, the your year end is the March financial year. If you sell on that one, after that another, so
Another
2 years you can split.
Yes.
So you can get 2-year annual exemption. So this type of few things you can think about it. CGT purposes.
So in general, obviously, because with the spouse you have no gain, no loss, the transfer.
Correct. Or
So,
transfer, no.
So obviously,
no loss,
sometime you
Even
might
gift.
see that, you might actually think about that. Okay, my spouse is paying basic rate taxpayer, and I will pay higher rate.
Correct.
So rather than I sell the share, it's better that my spouse sell the share. For example, maybe she work part time, so she still have £12,000 basic rate limit left over. So £12,000 worth of gain, I can transfer it. So I
easily.
She paid 18%. If I say that I'll be paying 24%,
of course,
isn't it?
Of course.
So that's a very
the planning
easy way if you can do that, isn't it? So timing, make sure that you get both annual exemption. If it's required, both of them are different type of taxpayer.
Transfer the asset.
Use those sort of things. And obviously there are other things like gift relief, rollover relief.
This is the rollover relief, gift relief you can claim because of selling as a asset.
Depending on the qualifying asset.
Though this is like temporary, we can say, it's not permanent. But this is good for like a company.
I think we might have to go for the break.
All right. Okay.
So thank you. 1 minute. So we have 1 minute. So we can carry on talking. So if you just to sum up that, the CGT tax is very important, that annual exemption we can, for example, I don't need money, but I don't want to lose the £3,000. So I can sell it now and then buy it again, the share. If I talk about the share.
Oh, this is good one. Yes.
So that means, my buying price will be higher. Next time I want to sell it, I get the exemption.
Even there is ISA as well.
Yes.
Obviously, you can invest the ISA, then you can no tax. And then you say the inheritance tax and CGT. This is interrelated as well.
Yes.
If you gifted the spouse, this is exempted.
So we are discussing about capital gain tax and IST, the recent changes and how it might impact, especially the people who have a bit of high net worth portfolios, property, shares, and then we discuss in general regarding the will, and then what is the importance of having a will. So now we are going to look at a bit of more on IST, but before that there was a query from one of the viewers earlier on an email. So that one I'm going to discuss with Mr. Sajay now. So Mr. Sajay, one of the viewers actually emailed a question regarding that pension. What is the benefit of pension in terms of the income tax? For example, if I'm working, I contribute to pension, or even if I'm self-employed, I open a personal pension, or even if an employer, we contribute to occupational pension. So actually that total pension has got what type of income tax and corporation tax, what are the benefits, if you can just discuss with us.
Thank you, viewer, for asking the nice questions. Very important question, basically. Actually, if you first of all you need to know you are a higher rate taxpayer or basic rate taxpayer. So this is the tax planning is here. So if you are a higher rate taxpayer, and then if you contribute the pension, then what will happen? Your basic rate will go up by the amount you are contributing. So for example, if you contributing £10,000 in the pension, and if you are a higher rate taxpayer, straight away we can save 20% tax when you're submitting your personal tax. So this is the main for self-employed or individual person who is contributing personal pension. Correct. So this is the helps you, and then obviously another helps is if you contribute the pension, you had a plan in future that like pension you're gonna enjoy after your retirement. But though we have discussed just before another problem issue IST. So basically you need to withdraw the money the plan wise.
But obviously that IST, I just wanted to be very clear with our audience, that IST issues not necessarily going to affect everybody, because we are talking about
correct,
like significant amount of pension fund. Some people might not have that much. They might have 50,000, 60 or 70,000 pension fund. For
they
them,
don't need to worry
it's not an issue actually.
Exactly. So
because state need to be really significant
amount. Big.
Otherwise we have needed back to cover that IST.
There is a few things is there, but you don't need to worry too much. You're right. That's a very good question. And then this is the self-employed, and relatively I can tell you that if you do let's say you are a limited company owner,
Yes.
and then you are a small limited company owner, what do I say, like a small company, then you can see your profit is too high, you are paying so much corporation tax.
Yes.
So that things you can save some money. For example, if you are a corporation tax paying 25%, then if you contribute the pension, your pension pot
Yes.
through your limited company,
Yes.
then what will happen, then you can claim all the expenses,
And the allowable expense.
allowable expenses,
Yes.
whatever you are contributing.
Yes.
So that will help your corporation tax.
So
you
saving
can save
25%
saving
tax, yeah.
25%. Even I saw this, so many few my clients they do, even they contributed this money with the pension. Basically we say that we can fry the fish in the same oil. So people say, because they are, what they do, they invested in the I think last 2 weeks ago you were discussed, no? The CIC companies
Yes,
contributed the whatever you are saving, the 30%.
Yeah.
So that planning is here as well, the
Yes.
pension. So yeah, limited company, you can do this. It's good for you, any company who paying the corporation tax. You can help. You can.
So
save the
actually, if I'm an employee, if I contribute, obviously that's deducted from my salary. I save tax anyway.
Yeah.
You know? If I'm a self-employed person, I go for a personal pension. Then if I put £80, actually it's top up £20 automatically. My pension is 100, and then I have tax saving if I'm a higher rate taxpayer by extending the tax band. That is the technicality.
Yeah, because of you need to gross it up your whatever you contribute.
So thank you for that. And then obviously if you are an company and a director, then maybe you contribute, that will be allowable expense, so you save corporation tax. Isn't it?
Correct.
So actually it's good win-win scenario for
people does, because if you the paying corporation tax, why you can't save the money?
So the issue with the IST pension fund being the part of the IST is actually not necessarily affect everybody. We are talking about the people who had got big amount of pension fund and also big amount of estate, like more than say £1 million as a sort of family.
Correct.
Because obviously if you look at IST, we got nil rate band 325,000, then we have the residence nil rate band 175, altogether $500,000 for individual. So if it's a couple, it's 1 million altogether.
Correct.
So 1 million altogether, if you have estate, you should not be worried that much. As long as you have proper will, proper process there, housekeeping is nice, you should be okay. Thank you very much. So Mr. Khan, so that's what we stand for now. So we stand for actually the new rule IST is not necessarily going to be too bad for everybody, isn't it, in general? However, if your estate is really high enough and then you have a big amount of pension fund, then you need to think about the tax planning, isn't it?
Yeah, I think now the trouble, Dabir, is that the excuse me, the property prices have gone so high.
Yes, it's true.
I mean, you mentioned NRB and RNRB, and that's fine. It's up to 1 million if husband and wife. But the issue is the property prices now, an average price in London is say 700,000. Now, anything on top of that is going to take you over that threshold. So that is in itself an issue. And also I think people who are at risk are those who are now single, partner has passed away. They are the ones who really need to look out for IST planning. I'm not saying don't plan if you are married with a spouse, quite clearly, but I think the alarm bell starts ringing when you are the only spouse now, and quite clearly there is no spousal exemption available, and then you basically are vulnerable now to that 40% IST that is just waiting for you to and I think Labour government, if you look at how they have behaved, they have, well, rightly or wrongly, I mentioned that last time as well, that they're trying to get a bit of a moral balance. They want to maybe slightly punish the accumulation, passive
and active.
So exactly. So there's okay, fine. Income taxes haven't gone up, although the rates are frozen, which effectively means that you're taxed. More people are being pushed into the higher rate band. But with the accumulation, and I think I really feel, I've said it earlier, with pensions, there was one area where we say to the clients, save it for when you are into your mid-60s and don't want to throw in the towel and then enjoy it. Now that's 50% of that is at risk of being wiped out, particularly if your estate is above the nil rate band and the residence nil rate band. So that is, I think, a real and present danger.
So in that case, obviously, as you mentioned earlier, that we need to maybe plan early and use the 7-year window of 325,000 as well, isn't it?
Absolutely. I think, again, you see, a lot of that is quite cultural.
Yeah.
We are, I think, within the South Asian community, and there is this overarching sort of thinking of keeping control.
Correct.
And I think we also don't like talking about death very much.
Yeah.
So I think
it's a taboo, isn't it?
It's a taboo. Don't talk about it, and fair enough. But I think, and something that we'll probably pick on a bit later on, same things apply to protection planning. I've seen people running a business. They're generally sort of one-man band, one-person band, if I may say. There is no key person insurance. There is no real business insurance there. And God forbid, it's a business that they built up, and there is no protection. There is no protection in their real lives. So I think the mentality is such where you are just kind of, you're staying clear of these issues really, and that causes a real problem.
Thank you for your insight on that. So before we discuss a bit of IST planning, and then obviously we'll be touching a bit of financial planning, because we don't get a financial planner every episode. But before that, for our audience, I think we discuss about a bit of will, but I just wanted to touch with a bit of probate, because these are related, isn't it?
Yes, I mean, although we sort of don't directly deal with probate, but the issues are very at the basic level. I mean, I think this is something that you realize partners can probably get together and do a bit of housekeeping.
Yeah.
Sometimes, one partner does not know even the name of the bank account their spouse has, what insurance policies they might have, what sort of premiums they pay. So, we always have encouraged clients to maybe keep a common folder.
Yeah,
correct.
Where they can just keep information that can be shared.
It's reduced lots of hassle afterwards, isn't it?
It really does.
Are you breathing, or are you thinking about getting the documents?
I think three of us sitting here, we might be guilty of that in our own right. I'm not trying to play perfect.
Yeah, it's true. It's the reality.
We are leading the profession, but I think we all are guilty of it.
Yeah, it's true.
I understand having a bit of privacy, nothing wrong with it, but there are some common areas which need to be probably discussed with your partner. I mean, you like it or not, spouse in the UK is a very important part of your estate, of your tax planning. I mean, Sarah was talking about a lot of CGT, interspousal sort of planning and on gift relief and so on.
Even IST as well.
IST as well. So it's very important really that do a bit of housekeeping, and it doesn't cost much. You might, I mean, again, this sort of misconception that financial planning will cost you an arm and a leg. You could do it with a bare amount. Just do a basic financial health check and see where is your protection planning, where is your will, where are your assets, and then just get it all in order, really.
Thank you for that. So now maybe we can discuss two things. First of all, I want to, because considering the changes in the IST and everything, so if some of our viewers within our community, they have a big amount of, as you mentioned, that property price is really high. Even if you have 2-3 property in UK, you are talking about 2 million, for example. So in that case, if you have a good amount of property portfolio, plus add with the pension and maybe share and other stuff, so for them, what sort of I know that one size doesn't fit all. It's a scenario thing as well, and actually what the person wants in their life, that's also important. So what type of maybe guidance or tips you have for them?
I think broadly speaking, there are two things you can do. Some people, they just basically, we ask them, when you go above 70, your estate should be reduced, not increased. So there are really two things you can do. One is make some lifetime gifts. If you are your own man, then we would just say that try and sell those properties who are standing at the least capital gain. Do it in a clever way. Bring the estate down. Bring your rental income down. So you're not really always a higher rate taxpayer. I've seen people with rental income pushing them over 100,000, and then you're losing your personal allowance.
Yeah.
and suddenly
more than 100,000.
and they get really surprised. Oh, why am I paying 20,000 sort of income tax? Because they've lost, by the time they got up to 150, 115, 120, the personal
Obviously, if it's more than 125,000, 140, you lost everything.
They lost all of it.
That's why we had advice for the contribute the pension as well.
Yes, so when you contribute pension, that adjusted net income goes down. That's another important thing.
It does go down.
Yeah.
But then pension, we have the other problem now with the IHT, I guess.
Yeah, I know.
So a lot of people, like I said, did salary sacrifice. They still do. That has been limited now as well, obviously.
Yeah.
So just quickly, very coming back to your question, lifetime transfers, if you can do it. Also identify, your dependents, how you're going to deal with it. I've seen some clients who might have a problem with a beneficiary who might be vulnerable.
Yeah.
And that needs to be assessed. And I mean, there is you can set up a trust for vulnerable, which has got very, very tax effective outcomes. There is no CGT can be rolled over. There is no IHT. Even the beneficiary, the tax to the beneficiary is minimal. So if you can do that, that could also be one way of looking at it. A trust structure. But again, trust structure, don't just do it for tax purposes only, because a lot of these have been abolished last 10 years. So if you're looking at asset protection, maybe it's a good way to go.
So trust is good in a way for protecting the asset rather than actually tax planning.
Rather than actually tax planning, unless it's a, say, trust for vulnerable or a trust for a bereaved minor. It's a minefield.
Yes.
So like you said, one size doesn't fit all. You got to look at the wording of it, how it's structured, and then deal with it in that particular way. But final point, property portfolio, as again very cultural, but it could really be a very, very high risk for IHT purposes, and that needs to be kept in mind, because you won't get business relief on it. It's not a business asset.
Yes, because it's investment. It's treated as investment. That's the problem, isn't it?
Absolutely.
Because some people create a family investment company and put portfolio, but obviously that will be treated as an investment rather than trading. That's the problem.
It's not a trading company. That's a problem, isn't it? So they want to get.
I wanted to add one thing as well for IHT, because especially our community, I have seen that some people passed away, but they should contribute the charity. So 4% tax they can save.
Yeah. So rather than 40, it will be 36.
36. Yeah, 36. So
depending on the percentage of the estate they go for.
So I think a charity donation is good way to
first
use
of all, charitable donation is exempted. It's no IST on that. But if you give a good enough amount to charity, then that 40% can be reduced.
That's why I'm trying to mention this. This is if you can, you should use this.
No, obviously, no. In our community, people do as charity, and then if that charitable donation help you to reduce your, IST tax, why not?
Just got to make sure that you're not trustee of that charity to which you're donating. Then the scrutiny is a lot higher.
Yeah, so there's a conflict of interest, isn't it?
Charity Commission generally will ask a lot of, it's not forbidden, but if you are the trustee of a charity to which you are donating, then you have to satisfy.
Registered charities there.
If they can do it to independent charity, it's fair enough.
Yeah, so that just need to be mindful.
Yeah, absolutely. Just a point to keep in mind.
Thank you. I think we don't have that much of time, but I just wanted to touch the last important point. Mr. Khan, you work with lots of clients, and obviously, financial planning is really important. But before I touch the financial planning, I wanted to touch the very basic of it, which is financial literacy. So what is the importance of it? And from your experience, if you can share that lack of that financial literacy, how people can be vulnerable and how people can get affected.
Yeah, I mean, a very good question. Again, I think I recently did some work with victims of financial crime, and you get the sense of that when you actually interact with them. Somebody has lost their mortgage deposit, somebody lost their pension. Now I think the danger is higher than ever. We are exposed to all these various platforms and websites and so on. So a lot of that is on the high. A lot of these investment scams are on the high. So going back to financial literacy, I think it's just something that we refer to as financial activation. It's like when you go to a GP, they ask you to do your own exercise, 15-20 minutes a day, be active. So same thing with finance. It's your money, and you must have a reasonable level of control over that money. When is it anybody last checked their pension, logged in and checked what it is? expression of wish, who is the nominee. People don't just remember those basics.
Screening, basically.
Yeah, exactly. So I think
But
it's
very basic, important housekeeping.
Correct.
Yeah.
people have mortgages. They have no idea what insurance they have against their mortgage. Do you have a life insurance? Do you have critical illness?
Exactly.
Do they have income protection? Do they have anything at all?
Very
And
important.
is it joint life policy with their partner? Is it pay out on the first death? So I think the point with financial literacy really is that explaining to people something as simple as to be able to look at their own payslip and understand what are they paying out. People can't differentiate between an employer contribution and an employee contribution. So a small thing like that. Pensions, you mentioned how it extends the basic rate band. Two types of pensions: relief at source and net pay. With the other one you have to go and claim 20% from HMRC. I've seen clients who haven't claimed it for years. I mean, 10-12 billion remains unclaimed in tax relief with HMRC. They're in no hurry to pay that to people. So I think that the financial literacy, our message is everybody should have a basic level of financial literacy where they're able to understand. Somebody gets a credit card, you got to understand the terms and conditions. What does it involve? How does it work? So I think something basic, debt, equity, and then bigger things, pensions and so on, so they are able to hold their own when it comes to the financial world, which is awash with all these. I mean, you open YouTube, the people are attracting you to double your money. So you got to be able to differentiate.
So with your experience, how do you see, obviously the traditional financial planning, what we have, focus on maybe investment and accumulation of wealth and everything, and then the well-being side of it, thinking about what I want in my life, and how can I relate my asset to work what I want. So why this is important? And there are these things are changing, people are growing in that area, but from your experience, if you can share your thought for our audience, that why that is important.
I think the trouble is that financial advisor is going to focus on financial assets only.
Yeah.
Because that's where I'm not trying to knock anybody, but that's where they will get their
expertise, basically.
Whatever the percentage and so on. So what about the other assets? And what Dabir just said, I think the most important part of any financial plan is the human capital.
Yeah.
The focus must be on the client, not the money. That's first. And financial assets being a very small proportion of the assets, a good financial planner should take really a holistic approach. And it should link your life goals to your money goals. Once I've aligned your life goals to the money goals, everything else will follow. And rather than just looking at the excess 2 million, 3 million and putting it in various investment products on which I'm going to get a little bit of commission, it doesn't really go well to the heart of the problem.
Yeah.
So I think the name of the game really is that people understanding that, again, very few, less than 10% people really ever seek financial advice. And again, the misconception is, it's going to, I don't have much wealth. Why should I go to a wealth planner? But the issue is, across the spectrum, your problem might just be a basic health check, which could be less than a Netflix subscription will cost you. And our mission really is that this message should go out to as many people as possible, where they can look into their own affairs, get financially activated. And with financial planning, don't forget, unlike the accountant, the heavy lifting is done once.
Yeah.
I just sit with you, I look at all your, start with the will from A to Z, you walk through, and all the heavy lifting is just done once, and then the other years are review years. If there's a major event, God forbid you're a divorce or something major happened, then you can probably come back. So, heavy lifting, do it, get peace of mind, understand what you need in terms of your life policies, business policy. You might not need it, but just have a conversation and then tick it off. That box is taken care of. So that's something that needs to be looked at.
Thank you for that. I think we have 2 more minutes to finish the program. So Mr. Sojoy, thank you again for coming in our program. It's hot weather.
It's my pleasure.
Yeah. So for last 1 minute we have, so if you wanted to say something to our audience.
Yes, obviously I can say my audience, if you like this program, I think you should continue. This is a very good platform. You can learn the basic things. Even sometimes you do the Bengali as well.
Yeah.
Or Bengali.
Yeah. Today, because our Khan is doesn't understand Bengali, so we have to
they will get
use
benefit
English.
most of it. Yeah. Because all the small businesses in our
no, normally we go with Bengali.
Because I've seen our community now, a lot of people does business.
Yes.
Small businesses.
Yeah.
So small
And it's really
businesses,
helpful for
small tax planning advice is very good. And thanks for having me again.
Thank you. So, Mr. Khan, if you want to say goodbye to our audience.
Yes, thank you to you, Dabir. And I think it's my message is never suffer in silence, always seek advice, get free consultations, and it's money. You should control your money and not the other way around. So always a pleasure to be here, and thank you.
Thank you. Thank you. Allah Hafiz.